we also have to ensure that you start inculcating those good financial habits. And this is why we are always happy to be able to chat with Crystal Howell. She is a certified internal auditor, chartered professional accountant. Good morning. It's great to see you. It feels like it's been a while.
It has, but I hope everybody enjoyed their
We
independence.
did.
And now that we're moving into the last days of 2020, preparing for that Christmas season, I hope everyone is having a wonderful time.
Thank you, Crystal.
Indeed.
So you help us. You've been helping us through the year, and as we look to a better 2021, we want to make sure that we're armed with the necessary skills. So yeah, Shane. So let's continue with the good, sound advice. Where do we pick up today?
Well, just to recap, most businesses usually do keep track of their income and expenses. And that's what we would have been going through for the last few weeks. But we want to get into some other areas where people may not necessarily write these things down for their business, but they're equally as important. And we have something which we call a statement of financial position. Some people may have known it as a balance sheet, and it keeps track of certain other things that persons may not always think about, but they're still very, very important for your business and for you to know where you stand financially. So, one of the first things that we can discuss that's on this statement is something called the accounts receivable. And it's pretty much what it sounds like. It's all of the money that persons would owe to you. So if you have, even if it's a simple fish and chips shop, you may have some person who lives in the neighborhood and they would have bought a container of fish and chips and they say they're going to bring back the money next week or tomorrow or whenever. That's some person who owes you money and they should go in your accounts receivable listing. So you need to be able to
Okay.
keep track of all of these things because even though your business may not have received the actual cash, it still has a sale that would have gone out and all of the things related to that sale, the potatoes that made the chips, the fish that would have been fried, all of that would have been included and gone out of the business. But you need to keep track of the money that is supposed to be coming at some point. And the reason why this is so important, it helps you to be able to understand why your business seems to be booming, sales are going out through the door and everything is going really well, but you have a list of persons who may or may not be paying you back any money that they said that they would have owed. And that's why it's also important to know how old these accounts receivables are. So, especially if you have a business that is dealing in things that should turn over quickly, you wouldn't expect your accounts receivable listing to be months or even years old. Of course, there's certain other businesses, like for instance, a Quartz or a Standard or any other business like that, where if you're bringing out furniture, it could happen for a much longer period. But
Right.
it's still important to keep track because you don't want to forget these persons. You want to make sure you stay on top of it and that they're going to pay you within the timeline that they would have agreed to. So if it's supposed to be 3 months at cash price or a year that they would have had this money owing and they're supposed to be paying piece by piece, as a business person, you need to be tracking these things, especially if you're going to be charging interest on the outstanding amounts that people would owe.
And you must make them aware that interest can be added in that regard
Yes.
too. What is one of the other big concerns that you want to help businesses address going into 2021?
Well, there are a lot of areas that the statement of financial position would help with, and we'll definitely get into those in the next few weeks. But another area would definitely be the accounts payable listing. And this is the opposite. You need to keep track of how many persons, suppliers, etc., that you would owe. So you want to make sure you keep this listing to avoid any potential late payment charges. Because let's say, for instance, you're renting or you would have purchased a new stove or whatever the case may be. Sometimes there may be charges associated with these things if you owe for an extended period of time. So having a listing of every single person that you would owe money to and being able to keep track of when you may incur charges could help with your cash flow so that you can make those with the charges a priority and be able to say, okay, maybe I can push this one back and pay this one first so that I can avoid having to make that payment. And this is really important when you have limited cash flow. You don't want to be unnecessarily paying out any kind of fees if you don't have to. And if there are places that are going to offer a discount for paying early, even better for you to be able to keep track. But then you can see why it's so important to have these notes and reminders, because if you have a place that's going to offer a discount in, say, 30 days, what is going to remind you that in 30 days you need to have this amount paid so you can take advantage of that discount? Because writing it down or putting it in an Excel spreadsheet or into a program, but you having nothing that will remind you that in 30 days this discount is going to expire really doesn't help you out. So you need to make sure that whatever system you use, you also have those things built in so that you do not lose out on potential cash gains, discounts, or having to pay late penalties or fees.
So setting up almost, it sounds like you're suggesting almost setting up automatic payments so that you do it before. And what are your thoughts on trying to keep accounts in credit as much as possible, even if you work on them one at a time? We've got like 2 minutes.
I wouldn't necessarily say automatic payments
Okay.
because you may set it the automatic payment and not have the funds for it. And then your bank may charge you a fee in addition to that, but you definitely should have an automatic reminder so that you can review what cash you have available and be able to make a better decision about how you would want your cash inflows and outflows to go. And especially when it comes to the receivables, you want to keep on track of that. You want to be able to send out statements to your customers if it comes to that, depending on how fancy your business is. If that may just be a phone call telling the person down the road, you know, I have this thing outstanding. When are you going to be able to come and pay? Or reminding them when next they come in that their tab is at this amount if they'd like to pay down on some of it. Depending on the type of business you have and the funds and resources you have, would be able to guide how you're going to be able to manage this process. But I hope persons can see the value of making sure that they track these things so that their cash flow can be better managed. And it's not just a matter of monitoring how much cash comes into the business and how much cash goes out, but also how much cash is owed and how much cash the business owes.
All
Yeah,
right.
those late payment dues can really affect your profits. Crystal, thank you. Always a pleasure. I can't wait to hear you talk about helping these Christmas shoppers avoid putting themselves in a bad situation for 2021. So we'll look forward to other conversations from you as we get closer to Christmas. You stay safe till next week, Crystal.
You too. Enjoy your day.
Thank you. You do